Uh, in that understanding, you are now you clear? Understood?
No.
So answer must be
3.
you. Okay, Baha?
Yes, yes.
Good.
Third one, school is a curriculum.
Yeah. Now we talk about types of small. Can you write a small note? In order to produce a complete financial statement, in order to produce a complete financial statement, we need a process known as
We need
a process.
to process.
We need a process known as bookkeeping. We need a process known as bookkeeping. We will talk about this bookkeeping in detail a little later. For the time being, just understand this. That there is a complete bookkeeping process before we have the financial statement in our hand. It's not an overnight thing. Tomorrow morning I go to office and I pick financial statement. No. So that has transactions, source documents, and then entries, records, and so much of process. So that whole process is known as bookkeeping. Types of business entity. Next subtitle, types of business entities. First one, sole trader. My car, my petrol business. So, single owner business. Sole trader means single owner business. So, just write that, single owner business. Number 2, partnership.
Partnership.
Yeah, see, sole trader, partnership. Now, when come to partnership, it is, you just write it in point form. 2 or more partners. Point number 1. 2 or more partners.
2.
Or more. 2 or more.
After partnership.
Under partnership, just write some points.
2 to number 2.
2 or more partners.
And the first one you told single owner business?
Yeah, single owner business. That is for the sole trader. Okay. Now, second point here, can you please tell me, in a partnership, how many partners maximum we have? We can have. It could be maximum of 20. In any given business, for you to have a partnership, either minimum of 2, maximum of 20. 20 maximum. At least one partner's liability should be limited. Should be unlimited. What do you mean by this? Now let's say sole trader. Sole trader business, at the end of the business, he end up having a loan payable of 100,000. Business only have 50,000. So balance 50,000 also he need to collect. What he should do? He should go home, he should bring anything available at home. He cannot say, oh my friend, I don't have things in the business. This type of situation is known as unlimited liability. That is for sole trader. When you go to partnership, also same story. Partnership liability also must be unlimited. But there is one chance given to partners, one or more of the partners' liability could be limited. Now we have maximum how many partners? 20 partners. Let's say 5 partners joining with a special agreement. Whatever it happens, my liability is only 500,000. No problem, you can accept. It can be 5, it can be 10, it can be 18, it can be 19, but it can't be 20. At least one partner's liability must be fully unlimited. If anything goes wrong outside the business, this particular man must be liable.
Again, this point.
See, what I am saying is, among the partners, now you understand now maximum how many partners we have? 20.
Understand.
Now, you understand what I am saying about liability? Let's say, Masalan, if you have to pay outsiders, this business has to pay, let's say 5 million riyals. Now, then some of the partners join to the business with a special agreement with others. Whatever it happens, I will my liability is maximum of 200,000. Let's say now how many partners? 5 partners.
Yes.
So each partner how much? 1 million. Total how much you need to pay? 5 million. Now balance 4 million.
Yes.
This 4 million should be settled by even at least by the single one partner. He should be the final ultimate responsibility for the entire business. And also please note, he will be the top man in the business also. He will be like it's his business.
So if it is one, he can process. Right?
Yeah. So condition is this. You can have 20 partners, no problem. You can also take partners with liability limited, no problem. But at least one partner's liability must be open, unlimited. He should be settling every outside liability, whatever it happens to the business. So that is another condition. Another point. Partnership should be governed by Partnership Act number 2 of wait, there's something wrong here. Partnership Act 1890 Section 2 of UK.
This is for global?
Yeah. When come to partnership arrangement, this is the act they are using. So many small provisions inside this, like how much capital each partner should put, what is the profit share, should the partners take salary, should the partners can take interest on their capital, can the partners withdraw money, all these are written here. And if there is a dispute comes for the partners, there is a special law called Garner versus Murray. There are 2 partners. They had a business and they were running the business, and then at the end they had a dispute. Then they went to courts, and the judge just gave a verdict, what you call a judgment, and that judgment has become internationally accepted judgment for anyone who have a problem to resolve a partnership business. That case is very famous. Name is Garner versus Murray. What it says, maybe this is not part of your syllabus, but for your knowledge. Garner versus Murray. What happens here? Judge said, if there is a dispute and no agreement, and you want to get out of the scene, then you should use last agreed capital ratio. Let's say your total capital available in the business need to be divided. How you divide? Based on the last agreed capital ratio. How much money you finally put to the business. Let's say I put 300,000, you put 200,000, so 3:2. So that is the ratio what I am talking about. 3:2. So anyway, so then to talk about yes. Okay. The third one is limited liability. With that, we will stop the lectures, and you can stop the video. We will play Maghrib and go.
Now you're going to start now? No, this is next class?
Yeah, we'll do it in the next class. Yes. I will take this video now itself to my laptop. Then easy for me to